Welcome to Quantum Finance. My name is Parker, and this is our end of week recap for the week ending October 20th. So, in this video, we'll take a look at all the charts, then we'll go over some news and data from this week, and then we'll take a look at the economic calendar for next week. Starting here with the S&P 500 SPY ETF. As you can see, we had a massive red week here in the S&P 500, getting rejected off our weekly midline and pushing down into this lower extreme. I do want to point out here on the daily chart, as you can see, we have had a big red past 3 days. If you look down here, we did not quite break through these previous lows set back here from the beginning of October. This is a very bearish close, but as you can see, we did not currently break down through that lower extreme. It does look very bearish though. S&P 500 looking like it wants to squeeze to the downside, but we do have that pretty major level of support sitting right down here at about that. What is this? This high is at 418.31. So if we do get an extension to the downside, I would be looking for that previous high right there. Turning to the U.S. 10-year yield, massive green week here in the 10-year yield, which is what you would expect when you have that big of a red week here in the stock market. As you can see, getting a nice pullback week last week, bouncing off that daily midline and getting a nice extension to the upside. As you see, getting a slight pullback today. Turning to the U.S. dollar, red week here in the dollar. As you can see, consolidating here right above that daily midline. As you can see, these bands starting to get pretty squeezed here. I would maybe expect a roll over here in the dollar, maybe for a retest of these previous highs back here for May, as these previous highs do line up with this weekly midline. But this weekly midline will move up in about an hour and 20 minutes, so maybe something closer to these previous highs back here from February. But definitely keep an eye on the dollar, because as you can see, getting squeezed here. I would prefer it to go to the downside, but you know what I think doesn't really matter. This could easily just squeeze back up. Turning to cryptocurrencies, Bitcoin with a really nice green week here. As you can see, getting a nice breakout here again today, breaking above these previous highs back here from the beginning of October and working its way up here towards the middle of this weekly range. As you can see, these previous highs back here sitting at about that 32,000 mark, and these sitting at about that 31,000, with this upper extreme sitting at about that same range. So nice bullish week here for cryptocurrencies, getting a nice reversal to the upside. Turning to XRP. Nice green week here in XRP. There was news about in the lawsuit that the SEC did dismiss the charges against the CEO and CFO of Ripple Labs. So that did happen yesterday. So that was very bullish catalyst, as you see the nice green candle we got yesterday. But pretty decent price action, but still kind of range bound, as you can see, sitting below, or still chopping around inside of this daily range. Sitting right there below that weekly midline, still looking for a close above, that 55 to 59 cent level here on our weekly chart. Turning to commodities, we have oil, small green week here in oil. As you can see here, pulling back on Monday into that daily midline, getting a nice bounce and running into about that $90 level before getting a slight pullback today. Turning to gold, another massive week here in gold. Gold continuing its insane move to the upside. As you can see, pretty much going from the lower, beyond the lower extreme, all the way to the upper extreme in 3 weeks. That is an insane move here on gold, getting really close to that 2,000 mark, hitting a high of 1,997 this week. We can pull a percent change here so you can see how high this went. As you can see, we're looking at about a 10% move on gold in just 3 weeks. So absolutely insane move here in the precious metals. Turning to silver, another big green week here in silver, as you see, getting back above that weekly midline, which is bullish. If you do look here at the daily chart, as you can see, wicking off that upper extreme on the daily. Obviously, silver not nearly as strong as gold. We can pull the percent gain here in silver as well, looking at about a 15% gain, or 14.3% gain here on silver. Obviously, a larger percent gain, but looking at the chart, that move in gold did look a lot more significant. So now we can look at some news and data from this week. So we'll start here at the front with U.S. bankruptcy filings rising. As you can see, a massive move to the upside here in the amount of bankruptcies. Here we have that news I was talking about, where the case was dismissed against Brad Garlinghouse and Chris Larson. We also have a chart here showing for the first time this century cash is paying higher yield and interest than the S&P 500 does in earnings. Here's a chart showing that the existing home sales fell another 2% in September and are now down 15.4% over the last year. Existing home sales are now below the 2008 lows and at their lowest level since 2010. We had also some breaking news that the U.S. State Department has issued a worldwide caution travel alert for risk of terror attacks, protests, or violent actions against U.S. citizens. We also had the Federal Reserve Chair testify earlier in the week, and here's just a quick summary of what he said. He said additional evidence of strong economy may merit more rate hikes. Return to 2% inflation will require below-trend growth. He is committed to sufficiently restrictive policy. There may still be meaningful tightening in the pipeline, and summer inflation data was promising. September is less encouraging. The Fed is still committed to their 2% inflation target. Basically the same old here from the Fed. Here's a chart showing the monthly change in China's treasury holdings. As you can see, them continuing to dump the U.S. dollar. We have 8% mortgage rates back here in the U.S. for the first time since 2000. As you can see, the mortgage rates just going parabolic here with the increase in Federal Reserve interest rates. So here's an interesting chart showing the cap rate versus the 10-year yield. The 10-year yield is now getting a higher return than the cap rate, which is the profit from operating a rental property. So now you can earn more money just sitting in cash and in debt than you can from owning real estate. We also had some breaking news that the U.S. military is preparing to send 2,000 troops to support Israel. We also have the FBI director warning that a rise in terror threats against the U.S. Here's a chart showing the home price to median household income. The U.S. housing market has become extremely unaffordable for the average American. The home price to median income ratio has hit 7.4x, indicating that the home prices are now over 7 times what most people earn. So now we can take a look at the economic calendar for next week. Tuesday, we get global services PMI. Wednesday, we get building permits, new home sales, crude oil inventories, and we got the Fed chair speaking. Thursday, we get core durable good orders, GDP, initial jobless claims, and pending home sales. And Friday, we get core PCE price index. So yeah, that should do it for the video. Appreciate y'all watching, and I'll talk to y'all later.